Don't leave your tax deductions on the table when buying a small business. Now, there are two ways that businesses are bought and sold from a legal perspective. Deals are either a stock sale or an asset sale. Now, we're not going to talk about the legal differences between those two strategies today. They are treated differently from a tax perspective. So in an asset sale, you're buying the assets of the business, which means you get to depreciate those assets, which means it reduces your taxes that first year or even the first 3 years that you own the business, depending on how many assets they have. If you do a stock sale, you're just buying the interest in the company. You do not get to depreciate that asset. So that means you don't get the tax benefits with the stock sale. Now, by default, most deals in the small business space are done as asset sales. So the default positioning should be, from a tax perspective, that this deal is going to be taxed as an asset sale. Now, what makes it tricky about the asset sale versus stock sale negotiation is that benefit that you gain as the buyer, the seller loses. It means they have to pay a higher tax rate on the deal. So if they do a stock sale, they pay capital gains tax rates, which are lower. If they do an asset sale, the taxes get a little more complicated, but they're getting closer to ordinary income tax rates. So everything that you gain here, they lose, and vice versa. So we run into all the time, you have smart sellers selling to naive buyers, or the sellers have CPAs that have already coached them on how to do this, where in the negotiations say, hey, can we do this as a stock deal? Kind of an innocent ask. But really what they're trying to do is trying to raise your tax rate and lower their tax rate. So what we do, and the benefit of doing these negotiations a lot, and we typically negotiate all the deals in our partner program, is our quick response. So when they say, hey, can we do this as a stock sale, or would you mind exploring doing a stock sale? We say, sure, we can look into that, but it's going to be treated as a 338H10. And right then they kind of pause. And what the 338H10 is it means that you're going to do a stock sale for legal purposes, but for tax purposes, it's an asset sale. So right then we let them know that, sure, we'll consider doing a stock sale, but we're not going to give up something with economic value without receiving something in return. We signal to them that we know what we're doing and they're not going to pull a fast one on us as well. And it sends a little message that I know that you just tried to screw me.